Hey everybody, hope that you are having a great week. Glad to be back with you after being out last week or not doing the weekly report due to the birth of my son, Mark James, MJ, and I want to thank everybody for sending me the congrats. Today I want to talk about, since I have a newborn son, what can he do and what do most Americans, what are they thinking you should do to grow your long-term wealth? And this is a Gallup poll that asked 1,000 Americans, where do you think the best place to put your money to grow your long-term wealth is? And 30% said real estate, 24% said gold, 14% said CDs and savings, 6% said bonds, and only 24% of Americans said the stock market. And I can tell you, the right answer is this. Given historical data and based on expected results in the future, your chance of growing your wealth the best, especially long term, is through the equity markets as a whole, the global, the world. And just think about it in terms of, if you think there's going to be more money flowing through the capital system over the next 10, 20, 30, 40 years as the world continues to expand, as the population continues to increase, and common sense will tell you, of course. What happens with the real estate market? Who knows? Historical expected returns are about 4%. Gold, complete speculation. CDs, savings, interest rates are at historic lows. There's not any place to grow long-term wealth. It's the place to keep your short-term cash. And bonds right now have extremely, historically low expected returns in the future. So ultimately, when you're a young person and you have to take some risk, if you believe risk and return, which they are directly related, you can sit over here and you're taking no risk and you get no return, or you can go further out here and take higher risk and get a higher expected return. As a young person, you need to make sure that your money is at least going to buy you as much 10 years down the road as it buys you today. And when you sit over here, you're guaranteeing yourself that it's not, especially 20, 30 years down the road. As you sit over here, you're not assuring yourself on that on a day in, day out basis, but over time, it's how you're going to be able to retire. It's how that savings you put in your 401k, taking advantage of the match, it's how that money you put into the markets is going to grow and most historically beat inflation over any prolonged period. And this is just another story I'll tell. I know a very young person is putting 25 most of his savings into what is a private real estate investment. And I have no idea if this investment is the greatest thing since sliced bread, or if it's going to fall apart and it's going to go to zero and he's going to lose all his money. I assume he knows what he's doing and it's probably a relatively good investment. But if you have $25,000 and you're 25 years old, the best place, without question, to put your money is in the global equity markets. Because I can show you that going back since the 1920s, now this is just the S&P 500, you increase returns looking forward based upon diversifying your assets further. The worst ever 20-year period, this includes the Great Depression, of return that you would have gotten with your money is around 9.5%. So if you take $25,000, I believe it's going to be 20 years from now, is going to be worth pretty much assuredly around $200,000 to $250,000. And that's not with taking much risk. That's owning that's owning just the S&P 500. You go out further and you start diversifying on international asset classes and so forth, and small in value, then you increase that expected return and you even lower the risk. So you can do that pretty assuredly, pretty confidently. Or you can put your 25 grand in some deal and maybe it works out, and in 5 years you might turn that 25 to 50 and it might pay you, whatever, 8% dividend or something along those lines. It's not that those are bad, but historically, this is where you are going to grow your money. And getting that money working for you today is the smartest thing you can do, whether you are 18, 29, or if you're even 69 and you still need that money to last you through retirement. That's when you start diversifying among other asset classes to protect, because you can't take the short-term volatility. But hopefully this makes sense. And this is why, too, our clients are going to be over here in the equity markets, in the global capital markets, and it's why you're going to win. Because if everybody believed this, the expected return would be lower because that's where everybody would have their money. So just hope this makes sense. Call us if you have questions, 770-984-2312. Until next time, I hope your money's making money for you.